All right. Good morning, good afternoon, good evening, everyone. It's 11:42 p.m. New York time. So we're in the middle of our Asian session. Not a lot of movement, not much going on right now. Don't really expect to get any trades, but we're going to take a look and see what's going on in the markets. I like to start out myself by going to the news here and seeing what's coming up. So, not too much here, a little bit of yen news coming out in an hour. Not really going to affect us too much there. This German news coming out here at about 2 o'clock in the morning. That might be important with Mario Draghi possibly making some changes next week. I like to take a look at a couple different calendars just to make sure I'm not going to miss anything. This is going to be important here at 5 o'clock in the morning. That's going to really make a difference on what Draghi's going to do. So that definitely may be getting the market moving. If we can, we want to be able to trade around that time frame. Should be able to get a few good pips in. So normally I have this up all the time, and usually have it setting about right here, so I can see if any news pops up, and just keep an eye on exactly what time it is, because I do a lot of news trading. This is normally on a third monitor, but for the sake of my recording, I've got it here for y'all to see. Alright, so now we're going to start looking at some charts. So we can see we're just pretty well flat since the beginning of the day at 5 o'clock Eastern time. You notice I got part of the chart here blocked off in red. If I slide this over, you can see this now says no trading. That's because I found that I generally have a lot of losing trades after 11 o'clock a.m. Up until around 11 o'clock p.m. So basically, to avoid having those losing trades, I just don't trade during that time frame. Sometimes I'll cherry pick, or I might take a news trade, but this is just my own personal experience I found over the years. I have a lot of losers in there, so the best way to avoid them losers is just don't trade that time frame. So currently we're in this yellow range here. This yellow range, you can see up here now, it says low risk only. That's a reminder to myself to scrutinize the trades a little bit more, and also cut my position sizes back so that I'm not risking very much, as opposed to the gray over here, which is my main trading time frame. You can see here this now says okay to trade. That's just my reminder that it's okay to go for broke. So currently not much going on, just moving sideways here. A lot of times I like to come in here and just so I can see a little bit better, I may block this off, because if we get a breakout below this or above that line, my block I've got drawn right here, then we may see some market movement. And putting these blocks on here just kind of helps me see a little bit better. Now come up here, take a look at the pairs. I've got here on the market analyzer the euro pairs, and I want to see if the euro is showing strength or weakness. The dollar, if it's showing strength or weakness, or the yen. That kind of gives me a heads up of which direction I most likely want to start favoring. So we can see here the euro looks like it's up a little bit against all its brothers except for the dollar. The dollar itself, it's pretty much all over the place. No good help there. And we can also see everything is up against the yen, so we got some yen weakness. This is my level 2 time and sales. Very important in my trading. I don't like to trade without it. Up here I got Henry Lou's currency strength meter. It's something I like, and it's free, and it helps to give you a heads up sometime. You know, you can look here and you can instantly see that the dollar is strong, the yen is weak. So even though we have nothing going on here on the euro, might be able to switch over here to the dollar yen and see if we can pull out a trade there. Wait here for these charts to load. I've got 7 charts up. Alright, so you can see we just missed this little breakout here of the yen. That's unfortunate. Got this resistance here in this area. Half tempted to start looking for a reversal. Maybe we'll take a short one here a little bit. Get up here in this area.
Order canceled.
And we're going to
Target filled.
here.
Order pending. Order filled.
Get in short right there. So basically what we're looking at here is I've got this level of resistance across here, and we just got this real quick spike up. So I expect us to pull back here, you know, back down in this range before continuing higher. So we got here 3, 6, and 9 pips. So depending on how the market moves, when the 3 gets hit, I may just go ahead and take everything off the table. Or I may just let it ride depending on how it comes down until all 3 targets are hit. All those are played by ear. Notice I keep my time and sales here on top. I'm always watching it to see how the orders are coming in. If we notice it moved up with a lot of trades, and then they seem to have died out. Trading tends to be boring, and you run into these areas where the market doesn't seem to move an awful lot, but you don't want to lose focus. You don't want to turn your attention to YouTube or get sidetracked, listening to music or anything. That's the stupidest thing I ever heard of, is having a bunch of music playing in the background, distracting you from what's going on in the markets. We may get a signal at any given time that we need to close this trade.
Target filled.
Okay, you can see our first target already got hit. We're back down into this area where I expect it to bounce. So I'm going to go ahead and close out all these other orders.
Order cancelled. Target filled.
Okay, so we're all filled there. Now each trade is different. Even though I had 3 targets set for that, you can see here we have, this is all near term, so we have the market went down, it comes up here, we have resistance, twice there we had resistance, comes down, comes up into this area, resistance again, down, back up here for resistance again, comes back down, goes sideways, finally pops out, comes back down, and you got the old adage of prior resistance becomes new support, and that does hold up quite a bit. So that's why in this area, that's where I was looking to take my profits at. Now, depending on how the move down is, sometimes you can maximize it by letting all 3 targets get hit, but in a slow moving market like this, where you see hardly no trades going, then you just want to take what the market's willing to give you and get out. So we're done on that one. It looks like we got 3 pips on the first one, 4 pips on the last one getting out there. So not a bad trade. You know, I may edit it out, I don't know, but my first time I pulled the trigger, I forgot to switch over to my live account, and I was sitting there on sim account, so I had to go close that out and open up my live account. So we'll pause this